Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So make it a great night, folks. Don't make assumptions. Learn to ask questions. It's always better to ask questions than make assumptions. Have the courage to ask questions and to be as clear as you can be. Once you hear the answer to the question, you won't have to make the assumption because you will know the truth. Market-wise, let's take a look at it out here. We had the Dow Industrials close down 200, NASDAQ off 145, S&P's off 23. Percentage-wise out here, folks, you had the Dow Industrials down 0.7, NASDAQ off 8, S&P's off 8, NASDAQ down 1.8%. Gold contract flat, $1,203.30. Silver down 6 cents, $14.61. Light sweet crude. Now it's going to get interesting here. We'll see where this light sweet crude market wants to go, because what we had out here, I'm going to put this on the continuous contract so you can see how this is shaking out. On the continuous contract, we bring this back, and what you're going to see is that we CL1 second. There we go. Bring this back 10 years, and what you're going to see is that when we overtook the swings that we're trying to get over for 5 months, we overtook them. We were coming into, when we came into, the lows of the highs of 2011. Now, the lows of those highs is $75.71. That was in August of 2013. And September of 2013, October of 2013, same number, and then going over to June of 2011. And 2012, and then $77.22. Now, what we did is this: you got up into those, and you gave it up. So it's going to be pretty cool here to see, can you come off this level with volume on the way down? Because if that's what you got, bottom line, that might be the end of this move higher. If we push into this bar, we pushed into this bar by $1.50. Now the bottom of that bar is 75.71. The top is 98. You push into this bar a few more dollars, then my take would be that, yeah, you get $90 gain. Thus far, though, it failed, and it failed pretty quickly. If we close under the $75.27 this week, which is only tomorrow, then the setup is that you will go back down to $64. The reason being is that we got over the high of 3 weeks ago. You're going to close under it. If that's what you got, then it's going to be a consolidation with the lows of 65, the highs of 75, and that's, by the way, that's where we've been now for basically 5 months. Let's go take a look at the unleaded gasoline as well as the heating oil. So unleaded gas, that was down 3.5 pennies. That baby, let's see, XB1, I'm going to do this too, XB. We're going to bring this on a continuous contract. Take a look at how this is set up. Yeah, this is a different ball game. This didn't get up to the highs of 215. So this says it can go down to 192. Now, heating oil is different. Heating oil actually had the biggest expansion. So let's see what heating oil has done. Heating oil, HO1. Okay, so HO1. Heating oil was down 3.5 cents today. We take a look at this. We'll put this on a 10-year also. Yeah, see, the heating oil, what says it was 251? Well, we got to 245. Well, heating oil has to close under 236 in order to back off. Right now, you're at 240. But big move today in oil, and we'll see whether they get any follow-through on the downside tomorrow. Notes and bonds, bottom line, I'm going to do the same. I'm going to go with the continuous contract and the 10-year note, because what we have here, 10-year note out here went to low 117.19, had a high of 118 today. Now, it did reject lower price. You had 2.6 million contracts traded. Now, what I suspect we're going to have here, though, is this. The note and bond market right now are trading back into the 2008 to 2010 levels. And I suspect, actually, that's how we're going to end up in the next few years. That's how it's looking. And the top of that is approximately 118. The bottom of that is about 114. Now, it does look like what we're going to do here from today to tomorrow is maybe do a little bounce in the bonds. And if that's what we get, what that would mean, and there's no doubt that this is how this works, is that the market would be going lower again tomorrow. And the aspect of we had the downdraft in the market because the note and bond market went so quick downtown, rates went so fast uptown. Market sells off. The way that the bond market is reacting today, it looks like it wants to bounce. If that's the case, I suspect what we're going to get, no matter what the job number is, I'm sure it's going to be a great job number, but guess what? A great job number means that the market's going to freak again because they're going to realize that rates are going to continue going up. That happens, you're going to see more red in the S&Ps, the NASDAQ, the Dow Industrials. That makes the bond market bounce. But I think the way that this actually broke down, we're going to be in a different level. Now, let's watch this. I want to show you this. I'm going to put this up on the 30 because the 30, I'm going to set this up and then we're going to go to a break and then we're going to bisect and dissect the 30 because the bond market itself, folks, this is the largest bull market in history. And when you actually look at this, I can take this back to 1980. That was the beginning of the bull market in bonds. And what we're going to bisect and dissect is that where would it have to go to break that bull market that we've been in, you know? And we'll basically go through these charts and take a look at it. It's pretty amazing when you go back. You know, if I go back to 1981, September of 1981, for a 30-year bond, you were paying 55 cents. That paid 14.5% from the U.S. Treasury. Check that out. And, of course, what we did, we went from 14.5% all the way down to almost 1% in September of 2016, maybe 1.5%, whatever that was. And then, of course, from that point on, you've been going up. So stay right there. We're going to bisect and dissect that good old 30 years as soon as we come back. Dow Industrials finished down a couple $100. You had the NASDAQ off 145, S&P's down 23. We're coming right back.